Okay, so the market's up 15 points, but some would argue, it's very modest gains. Others would say at least it's trading in the green. What's your view?
Thanks a lot. You realize that the quantum of the market this week has largely been propped up by a really overstretched foreign books in the market, especially their buy positions. On a week-on-week basis, they've done around 72% of the market. Although on average terms, the total overall foreign position in the market has been around 43%. But you realize, bottom line is that the quantum of the market is largely held up by foreign books, driving a lot of activity, especially actually visibly on Equity Bank, KCB, Safaricom, EABL, and a bit of Earth River Mining.
All right, let's talk about some of the gainers in today's market. You're talking about the blue chip banks, of course. Kenya Re up 3.3%, EABL up 2.4%. Now, obviously, people have been watching EABL to see whether they'd come to market to raise funds for its transaction in Tanzania. They've abandoned that strategy. Is that what's lifting the share price this week?
Actually, there's been a lot of reversal on EABL, and principally because that psychology behind a share overhang has been done away with. You realize that when you say you're going to do a rights issue, the market anticipates a large block of shares in the market. So what the market trying to do is to assign a discount on the stock. Based on that, it's more of a sentimental thing in the market. But when you come out and say we are not going to release a block of shares, we're not going to do a capital call in the market, so the market actually re-rates the stock, and that's you're going to see happening on EABL, especially with the foreign books. You're really building or stretching large positions on that.
Another one also coming to the market with rights issues is Kenyan Airways, and they're down 11.16%. So obviously, investors are quite worried about their shares being diluted. The question is, in the current volatility, why come to the market with the rights issue, Kenya Airways?
Really, you realize that Kenya Airways, they have what they call PDP payments that really elapse every month. So they want to secure a certain portion of payments for their airlines, and they probably have a deadline to pay it. And probably they look at the options, and they're looking at probably debt and capital call in the market. They're thinking it's more prudent to come to the market and raise a portion of that capital. And that's what they're doing. That's why they're coming to the market, irrespective of the situation in the market. The volatility is high. And by the way, they've pushed it forward to mid-Q1. So they're not going to do it this year. So, I mean, given the fact that we're in a liquidity crunch time, and also we're headed for the festive season, I mean, liquidity is going to be mopped off the market. So it's only prudent for them to push it to mid-Q1 for the exercise.
Okay, let's talk about some of the losers in today's market. TPS Serena down as much as 8.18%. Ati River down 4.3%. Ria Vipingo down 4.12%. Now, these have been some of the more stellar performers in the market over the worst period at the NSE. Is it profit taking ahead of the Christmas season or something else at play here?
Well, it's too early to talk of profit taking for Christmas season. What has happened this week, and probably in the larger last week, I've seen what I call range trading. What I mean by range trading is that you realize a share oscillates within certain band, and it's picked up at the rock bottom, and then it hits at the ceiling. There's a bit of pullbacks on the stock. So that's what has been happening with some of those stocks, especially at River Mining, and given the fact that there's a lot of foreign trading around those books, so there's that ease of movement in and out of that stock. So it's been a lot of range trading on some of those stocks that's driving them either up or down.
Right. Yeah. George, talk to us about what's going on with the CCK and Safaricom. It's reported that Safaricom is actually taking the regulator to court, suing them over the fact that the regulator has made the licensing of 3G for smaller operators more favorable than what it did for Safaricom, which paid in excess of $25 million for that license. So basically, Safaricom arguing it's unfair. It's not about leveling the playing field. It's about punishing the dominant operator. What's going on there, and has it had any impact on the Safaricom share price?
Really, in my view, that's quite immaterial to the market. It's a classical case of you buy, let's say, a computer in the shop at $10,000. 12 months down the line, you go back to the shop, they're selling the same computer at half price. I mean, would you go to the shopkeeper and say, hey, you gave me a raw deal here? I don't think it's quite immaterial to the market at the moment. And in my view, I think the CCK and the regulator, they are quite well within the discretion, you know.
But I mean, obviously, Safaricom does bear the brunt of its successes to a large extent. The CCK is making it easier for smaller entrants to enter the market, particularly in the 3G and data space. We are seeing tariffs that have been slashed exponentially by the regulator, although we've seen the reversal just recently by Safaricom. So to a large extent, Safaricom is a victim of its successes. And as the CCK tries to level the playing field, it's the big player that bears the risk, the biggest risk on its earnings.
I think it's true, but realize that the regulator is it's not a commercial venture. At some point, they need to open it up, and that's exactly what they're doing. And I think for Safaricom, you just need to play the dynamics at the moment. You know, you just need to find your right course within there. I personally realize that opening up the space is really detrimental to the shareholder value of Safaricom. But I think at the end of the day, the regulator has to open up the space, you know.